Is the interest rate that you're currently earning on your savings account seriously lagging inflation? Likely it is, so that's kind of a rhetorical question, and that is why I wanted to make this video, to share some savings accounts that you may not know even exist that are offering much higher interest than any of the big banks. Not only that, I'm also going to share how on earth do these banks actually calculate how much interest you earn? Because guess what? It's actually a little bit more complicated than that annual interest rate they post. Now, what you'll see promoted from your bank is your annual interest rate, such as 3%. So if you have $10,000 in savings and you're earning a 3% annual interest rate, the simple interest you would earn is $300. That's 3% times $10,000. But that's actually not how much you would earn after 1 year of having $10,000 in that savings account. That's not how it's calculated. Interest is actually calculated on the daily closing balance of your account and then paid out to you monthly. Not only that, and we've seen a lot of this year, your interest rate that you earn is not fixed. It goes up and down. It fluctuates based on the Bank of Canada's key interest rate. That's why one silver lining of this year is that we have seen interest rates on savings accounts finally go up. Whenever the Bank of Canada raises its key interest rate, the banks follow suit and increase the rates that they offer on their savings accounts. But for this example, let's make things very simple. Let's pretend that we are earning 3% on our savings account and it has not changed all year. So if you had $10,000 sitting in your savings account earning 3% interest, how much would you actually earn after 1 year? Well, the first thing you want to do is you take that 3% and divide that by 12 because you're actually paid out monthly. So you're actually earning 0.25% every single month on the balance in your bank account. And with that, a very cool thing, that interest compounds every single month. So you're actually going to earn more than that $300 of simple interest. We are starting the month with $10,000. And then at the end of that month, we're earning $25 because that is 0.25% on our $10,000. And then that gets added to the balance for next month. And every single month we earn a little bit more. This is the magic of compound interest. So at the end of 1 year, we actually earn $304.16. Now that is a very simple example and not very realistic because typically when we have a savings account, we're making withdrawals, we're making deposits, we're doing a lot of movement in that bank account. So I wanted to give you a real life example of a savings account that I held for a whole year in 2021. Now the interest rate that I earned on this particular savings account was abysmal. It was 0.10%. And as you can see, I had some cash in there, sometimes made some withdrawals, sometimes I made some deposits. And at the end of the year, I earned a smashing 58 cents. So now let's talk about some much better savings accounts that you could be utilizing to earn more interest. The bad news is there's not a single savings account that matches inflation, but that shouldn't deter you. That shouldn't make you want to give up. There are still some decent savings accounts out there. And again, why not try to earn as high interest as you possibly can? Now, I actually have a running list that I kind of made for myself and then I put it on my blog and I update it pretty frequently. And it has the list of all of the highest interest savings accounts in Canada. So make sure to bookmark it. And what you will see very clearly is not all of the online banks made the cut. Tangerine did not make the cut. And none of the big banks made the cut. A big reason why I wanted to make this list myself is because if you look on comparison sites for the best savings accounts, often they will just promote banks that have promotional rates. Those are rates that will only give you, a higher interest rate, such as like 5% for a limited time. And then it'll go back to their really crappy rate of like 0.10%. The running list that I've made, none of these are promotional rates. These are their regular interest rates. So at no point will these rates expire. All right, so let's take a look at some of the top savings accounts in Canada. First, we have Save Financial. The only caveat is you can only open up an account with them if you're a resident of Ontario. And since they are a division of First Ontario Credit Union, you also have to pay a $25 initial membership fee. Next, there's CI Direct Investing's savings account. Then we've got Oaken Financial, Wealth One Bank, and the last three are tied for 5th place: Outlook Financial, Hubert Financial, and Canadian Tire Bank. Now you may be thinking, I have literally never heard of any of these banks. And that's okay. They are all online banks, and honestly, most of them are just a subsidiary or a division of a credit union. Now with that said, because I still get a lot of questions about, are online banks safe? Yes, they're safe. No one can open up a bank in Canada without them being part of some sort of deposit insurance organization. So for all of the banks that I have listed on my running list, I also have a little section where it says, okay, what kind of deposit insurance do they offer? Are they part of CDIC, the Canada Deposit Insurance Corporation, or some other organization? And yes, all of them are part of some sort of organization, so your deposits are insured in case there is a bank failure. So the question remains, how much are you currently earning on your savings account? accounts, and could you be earning more? I think I already know the answer. It is not a lot and yes. So take this time to take a look at your options and, do something about it. You don't want to be like me in 2021, where I earned literally 58 cents in interest. Well, I hope you found this video helpful. Make sure to subscribe if you haven't already, and most importantly, check out these 2 other videos that I made about emergency funds and how to check your credit score in Canada.